Okay, let's get started. Today is 22nd of April. Um, we'll start with Bitcoin as usual. I'll start with 4 hours today and then we'll zoom out. Wow. So this week is not so good as we know. It has come down and altcoins actually beaten up badly. So let's see where they stand and try to analyze what they're trying to do here. So first question, is there any threat to the trend? The answer is no. This correction of BTC is deep, but not deep enough that would impact the ongoing trend. So in fact, this is less severe than this one. If I zoom, so from 4 hours point of view, if I focus only in this area, if I focus only this area, it shows that this is a major consolidation zone earlier and it has written back. So we can say this move is negated or erased. However, so it's back to square one from and back to March level, March support, March month, last month support. So there is no major damage so far. And if you look at, this was the low point, this was the consolidation zone. So it is back to consolidation zone. So the way I put is this consolidation zone itself has gone, has widened, something like this. You know what I'm saying? So earlier, this is how the pattern changes. The earlier the consolidation was this much. So it was like boring sideways movement, and then shot up, then consolidated, tried to break above resistance, but it failed, and then it retraced, right? And then there was another attempt, if you look at it, but it failed, and then came down slowly, gradually. There was no, in this drop, it was silent drop, I would say. There is no, there was no aggression. Interestingly, the US stock market was also not going down like this. DXY was also not going down like this, but Bitcoin. So in my opinion, this is very individual or Bitcoin specific drop. It was not driven by macroeconomic factors, very much driven by Bitcoin's own, um, I would say, algo, rather than some other external factors in this case. So that's one thing. And as I said earlier, this consolidation was like this horizontal, then a breakout. And with this, this now whole entire pattern has changed, where I don't have the shape on the trading view. The best shape that we have is the triangle. So I will try to depict with a triangle, which is not the perfect shape, but you will get the idea what I mean. Ideally, I need rectangular pattern, something, but it's okay. But you got it at this moment. So it's white line indicating the huge support zone. That's a white zone. Okay, so I hope this is not so messy. Let me zoom in. So this, as I said, this shape is not perfect, so I'm not able to cover this area. But that's all right. You got it, right? So this is the upper boundary, as you could see, and then this is the lower boundary, and this is how it is expanding. So this is expanding pattern. Okay, and I'll remove it. Okay, so this is the area in which now it's consolidating. Uh, Now I'll zoom out at 12 hours and then try to see what it's trying to do from its direction point of view, its movement point of view. I would say this was more like an unnecessary or something out of script move. I mean, we have to accept what it is, but to me, this was like threatening one. This was really a threatening one, as if somebody, I mean, this was, as I said, unscripted act. Like this was not part of the drama and something, some character was introduced in between, something like that. But it happens sometimes, so we accept it. Otherwise, this could have been really bad, in my opinion. This was really an edge of the atmosphere. I would say it would have gone down, or this was a sea level, so to speak. It would have sunk below this one. So this was really a lifesaver. Uh, Up to this was okay. If I draw a trend line, this was okay. But when it broke down, it was really crazy. And but good thing that it stopped at a critical support. So this was really a critical support. So if you ask me, this particular move or bounce, if this would not have happened, this would have been killed. I mean, this whole entire recovery attempt would have been, gone, totally gone, and probably it would have headed for new low if this was not supported here. So this was the key moment, as we know, after FTX disaster. And then second key moment was this one. This is the one that we saw yesterday is nothing. It's not a threat. As I mentioned earlier, this was really a threat. And I was on edge, like, but we nailed it as well. I called out this support and then it bounced off. So before this bounce, we called out support, as you know. So this was the critical moment. But yes, this was threatening. This is not threatening, though it looks similar. This is not threatening yet. Okay, so that's one clarification. And the pattern is simple. This is more like a hook. This is like a arch like this, and there's another one. So I'm just giving you extra range here, just for some more freedom, I would say, because sometime it could dip. So I would say even it hits 26220, there's no issue. Okay, only if it breaks below 2500, then I think it's a point of concern. Like it is not the moment like this moment, I would say. Even if it breaks below 25,000, it is not going to be the situation like touching this one. Okay, but I would say, of course, we don't want it to go below 26220. That's my limit, because then this structure will be broken and I don't want to be in it, personally speaking. uh, then I'll look for opportunity on the downside when it bounces. So this is my threshold. So 26220 up to 26220, I would say it's okay. And then after that, there is potential risk. But technically speaking, it won't risk the trend. Even this is broken, it's not there, so we don't have to talk about it. We don't need to, because it doesn't seem like it will break this one at this moment, but you never know. But this is just for preparedness. So you have three levels that I have given. Up about this, absolutely no issue. In fact, the current level is a support. So I would have drawn this arrow from here, but just as I said, I wanted to give a little freedom to myself. So I have added this arrow from here. So it could bounce and start recovering from here on, or somewhere in this zone with one quick leg down and then go up, right? So that is something we cannot predict, but what we can call out that this is a major support zone. And I think this is totally okay. Okay. And yeah, it's some, and Bitcoin went down 3% and the altcoin go down by 10% or something like that is totally normal in or 20%, 30% is totally normal, as we know. And that's why I always, I mean, it depends on everybody's expectation and plan, but Bitcoin provides stability, but it all depends on one individual's goal. So Bitcoin drops slowly, so that provides stability. So it helps. So as you go with the faster moving coins, the risk goes up, as we know. Right. So now if we zoom out even further on one day, do we see anything different? No, there's nothing different here. Yeah. I mean this was a breakout. This was a resistance. Then if we had extended this line, we got another resistance. If then we extended one more line, then we get this one. So if we look at from this point of view also, this is not a threat, and there's some room here up to this to this. So this is totally all right. So I'm trying to see from different point of view that this is not a problem at all. So this level or zone is not at all a problem. In fact, not a financial advice. In fact, this is opportunity, because ups and down are part of the game, as you know. It doesn't move in a straight line on the upside. So I was talking to one of my friends, or in fact, a partner, one of the business partners, and I was explaining that why people don't understand entry and exit, which I recorded the video and shared with you as well. But it's so simple sometimes. The key levels are important, and of course, what coin you choose is important, and it's very personal choice. But uh, it's very simple that refer the key level. The buying has to. So I would just recap quickly. Um, that there are two levels where one trader would buy. One near a support, and on a second when it breaks out a resistance. So these are the two levels where the entry is made. Now, so this is near support. So this qualifies, and the advantage of enter near support is because then the stop loss can be close by, because the stop loss is usually below the support. So the stop loss can be close by. So that's the advantage of entering near support. And when someone enters, when on breakout, when the resistance, that's another option for an entry. In this case, the support or stop loss would be below the breakout level. And if the breakout is false, means it goes up and then goes down, then the person is stopped out, which is totally fine. And I always say getting stopped out is not a problem. One has to know what is the tolerance level, that then the support can be. So stop loss is a personal choice. Why it's personal choice? Because my tolerance could be 1%, 2%, or my tolerance could be 25%. It is totally a personal choice, right? And of course, that if the tolerance is high and if then you stopped out, then the loss is more. So, but it's something individually you have to decide what is my tolerance level. And so if I'm entering here and this is my support, then I'll quickly calculate the risk level, because my stop loss would be below support level. My risk level is around 4.5%. So and then I'll ask a question. If I put all my money, I will lose 4.5% if I stopped out. But if trader says no, I don't have that much tolerance. My tolerance is 2.5% or 2%. Now you cannot. So then this is a bad idea. That my tolerance is 2%. That means my stop loss is this. Is a bad idea. Why it is a bad idea? Because I I'm placing my stop loss above the support, which doesn't make sense because you need this kind of a room. So the problem is, if I want 100% and if I want 2% risk, this is my stop loss. But this stop loss is not right because it's above support. It has to be below support. It can be somewhere here around 5% depth. Then it makes sense. Now, how do we do? So simply what you do is you don't, I mean, trader would not go by 100%. So if trader go by 50%, the risk is cut down by half. That means if I have 10K and but I don't go with 10K amount, but 5K amount, and if I am stopped out, I lose 2.5%. And if I go with $4,000, let's say, then my risk is even lesser, right? Around 2%, which is my goal. So if I have $10,000 money and my risk tolerance is only 2%, okay, then I'm not allowed to put 10K. Even if I have 10K, I'm supposed to put 4,000, around 4,000, which is around 2K. So that's a simple math. And it's so simple to understand how the trade can be planned. Okay. So this is general idea. It's not a financial advice. It's a logical thinking. It's logical thinking. But as I said, everybody has different risk tolerance. Somebody has 2%, somebody can have 20% or more, whatever. It's a personal choice. Okay, so I think you got the point, right? So if you have lesser tolerance, like 2%, then you cannot go all in. If you go all in and if you're stopped out, you lose 5% in this example, if your stop loss is here. And as I said, you cannot have stop loss here. This is because this is a common mistake people do. They put a stop loss with 1 or 2%, whatever, close by, but they don't consider the key level or support, and they just put it like that and they get stopped out. So these are the few things people need to understand. And if they follow certain guidelines like this, I think they could do well, in my opinion. So it's simple. Trading is very simple in a way, provided you get the idea on different patterns and key levels, which I offer here. What I don't offer, because that's consulting and advising, I don't advise or consult that what one should choose, what should be your stop loss, what should be your risk tolerance. That's not something I do, because that's not the scope, right? However, I provide technical levels which can be used as a map, and then you decide. So these are like this is like a map or GPS system. Like GPS system doesn't force you to do that you take a right turn or left turn, right? It tells you that, hey, there is next right turn. It just show you that there is a right turn if you're driving, right? But it's your choice as a driver whether you take a right turn or not. Likewise, this is the support level. I cannot tell you that this is where you put a stop loss. Okay, one can decide a stop loss even here. If somebody is very busy and doesn't want to track, then here. But in that case, as I explained, the risk management has to be proper. That because if you go deeper, that means your risk is 10% or something like, yeah, 10%, 9%. And if your risk tolerance is just 2%, again, then the money has to be 1/5. That means only $2,000 of total of $10,000 can be spent. Then only the risk is 2% with a stop loss here. So this is, so what I teach or share is the method or guidelines, best practices. You learn them and then apply on any coin or any situation. Because what I'm sharing is more like a formula. It's like a master key. That key can be used anywhere, right? So I don't need to say coin or level or where you put. I give guidelines and this kind of a framework which helps. So I hope this is clear to you. If not, feel free to ask me. I have explained this earlier, but it's very important that people should not lose money for silly reason. They need to understand basics of trading. And I find that so many people come as a dreamer, and they think that from day one they'll start make money, but they don't focus on trading part. They don't focus on the skill development part, because TA is not the 100%. um I mean, it's not 100%, it's 50%, and the 50% is trading skill. So the trading skill plus TA give you the right tools and probability for benefits. But only TA, only levels are not good enough. So that's why what I do is provide education like this, so everybody learn about key levels plus the trading method and best practices. So I hope you find useful, but it's very important that one understand this one. As I said, I don't try to say this is the best one. If you have any other best method and that is working well and good, but this is what I explained is my best method, and I like to follow that method, personally speaking, right? But everybody has different risk tolerance, so you have to decide what is right for you. So you choose whatever support level makes sense for you. You choose what risk level makes sense for you, and then decide your stop loss. Stop loss is required, okay? Absolutely needed. But as long as you know what is your exit level, that's fine. I mean, somebody can have a soft stop loss. What is soft stop loss? Means they don't put a stop loss, but they put alert, and they kind of come online and see. Because sometimes what happens, that the in crypto market especially, there is volatility, and there could be a quick drop and a bounce. So what a trader would do as part of this technique is they put they don't put hard stop loss. Means they don't put real stop order on the exchange. What they simply add is the alert. Now, of course, that trader is expecting to wake up if sleeping or offline, and then come online and see what is happening. That's the whole idea with the soft. So when one goes for the soft one, the assumption is trader would come online on alert and see what the price action is, and then decide. Because sometime, let's say my stop loss is here 26,083, let's say, and let's say Bitcoin drops quickly and then starts moving up, then my alert will tell that okay, it has hit the level that where support is. And then I would see if there is a bounce, then I don't exit. But if it continues to go down, I exit. So that's the whole idea. And as I said, because sometime the coin drops and then goes up quickly. So that's why some traders put a soft stop loss. They don't put hard stop loss because they don't want to get stopped out for any spike, so or quick wick down. So that's the whole idea. So I'm just sharing different techniques. I mean, some of you must be very experienced, so I don't want to spend a lot of time, but sometimes this kind of a repetition also help. Sometimes emotion changes our mind, so I try to repeat certain things, so it makes sure that good practices are not forgotten. Okay, so I think it's enough on trading practices. Coming back to our TA stuff, I think I explained the BTC. Some of you just joined, but it's okay. This session is being recorded, so you can watch it later on. So I won't be able to repeat what I said so far. Okay, now this one day is clear to you, right? But feel free to ask me any question after recording is done. I'll move to weekly using Bitstamp chart. Okay, so last time we had added 3 levels. Now when we move to weekly, you have to think differently, because weekly is for those who are not thinking resistance to resistance, but the weekly is for those who think from swing point of view. For them, those close by supports do not matter. Okay. These are the people who believe in trend. Okay. And those, they don't get bothered with 10% move or 20% move. They focus on swing. Right. So those who focus on swing, they track at weekly. So that's why you see the levels are different, the layout is different, because I don't know who is interested in what. So what I try to do is I try to cover lower time frame and also higher time frame for Bitcoin. So then both type of subscribers or users are happy that way. So when we talk about weekly, we're not talking about support somewhere here or somewhere here. We have different perspective. So last time I have simplified this chart and added these three blocks. This is a green zone where I said nothing to worry kind of a zone. Orange zone, a warning zone, right? Because if it enters, then it's warning for us. And this is red zone, that means it's a risk zone. That means if it enters this one, there's a high probability or highest level of probability of making new low. So so this drop is bad. Weekly candle has engulfed the prior week's candle, which doesn't look good. If I hide all this from a candle point of view, look at this one. It is very much similar to this drop. Okay, but I'm not trying to say it will, otherwise the logical mind will try to read between the line. As soon as I said this is similar to this, the mind is so, because that's the problem with intelligence sometimes. It tries to go one step ahead by its own and interpret, oh, Mihir said this is similar. That means this is going to happen. No, I haven't said that. So if I don't say anything, that means it's not said, right? So it is assumed. And if you assume, then it's up to you, because I don't assume. I have key levels. I believe in present. The levels represent future, but the price, we cannot assume that because it made this candle similar to this one, both are similar, there will be another one. That assumption. So that is not being in the present. Okay. We have key levels. So as and when it reaches to that level, we'll say, okay, it happened. But there is, so there's, you need to know key levels for the future. Remember the difference. You need key levels for the futures. Let me enable the drawing. So it's not that the chart is blank and I'm saying just focus on the present. No, what I mean is you have these levels. That means if it continues to go down, then you know that this is the level that you will monitor. But I don't mean that you assume that it is going to happen. See the difference. Don't assume that this is going to happen, right? So it is very important you understand what I mean being in the present. So you have futuristic levels, but the mind has to be in the present. Okay. So right now, the present is here. Okay. The present and the future might be here. The future might be here. You don't care. What you care is you put alert on those levels. You must have a plan that if it reaches here, this is my goal or this is my execution. If it reaches here, this is my execution, and so on. So the key levels is where the planning or execution happens. And the key levels is to be used, or they need to be used for planning. So when the key levels are given, as I said, it's like a map where it shows that point A to point B, and there are multiple right turns, because from point A to point B, there can be on your GPS system, there can be different routes, right? I'm just giving an analogy. But it's not that you have to choose one particular turn. You can go with a different route and reach to point B and so on. So point is, when you start journey from point A to B, you decide the route. out of multiple route. It's a decision that you're making. The map is not telling what route you choose or what turn you take, right? It says what all turns are available on the road. So similarly, what I'm offering here is what are key levels at different time frame available on the map, on the chart, right? Similarly, now as a trader, depends on the time frame, whether you track intra-week, which was the prior version, or a weekly, which is more like a swing or trend level. And then one can refer and choose that, okay, this is my level, this is my level, and so on. Okay, so I hope this is clear. But as far as the weekly is concerned, of course, this is not good from a present week point of view, but it's from this recovery wave point of view, this is tiny. Okay, this is not a threat, as I said. And so for simply, so you don't, I mean, to simplify, I put a box, and then there, you know, the boundary of this box, right? This is the boundary, this is the boundary. So you know that green zone, weekly point of view, no, nothing to worry. This is warning, this is this. So price action can be complicated, but the TA can simplify it, you know. However, some traders decide to remain confused. It happens when one doesn't accept what is happening. I'm accepting that this drop is bad, and I'm accepting, but I know that this is my boundary, so I'm not supposed to worry. But one assumes that, okay, because this is started, it is going to continue, then one cannot help. So this is very individual problem, right? Psychological or emotional, whatever you way you want to say. And these are the main reasons why people struggle. Otherwise, all the TA would try to make things simple, in my opinion. And that's my effort as well. So this is very simple bound. These are 3 levels depicting the trend level boundary. And then if somebody has to worry, even for this drop is a choice, right? Because some people want to be in all pressure for some reason. I'm not kidding. I mean, I have seen some people who are always worried, and some people are always happy, or, you know, fine, lightweight, they don't get under pressure. So there are different, like, personalities. So um, everybody will have to help themselves and develop skill and understanding to handle the situation, because crypto market is crazy, right? So one has to understand basic skill, I mean, develop basic skill. I'm trying to offer here, so that should help. Okay, so very simple chart, right? There's nothing to worry, you know, from a trend point of view. And we'll see if this line is broken, we'll see what it wants to do. At this moment, I don't need to. At this moment, we can say, okay, it has come down, but then we would expect it to bounce. Why I'm using the word expect? Because it has not broken the green zone. So if the green zone is not broken, then I can expect. Because sometimes people might be thinking that Mihir is saying, think about the present and don't be biased about buy and sell. Yes, what I mean, this is also clarification I think I'm supposed to provide in case there is ambiguity. When I say don't be bull or then don't be bear, what I mean is one has to be ready to change the mindset. Some people, even TAs, are so fixed in mind. They are always bull, always, no matter what. For whole entire bear cycle, they were bull, and it's their choice. It's a silly thing, but it's choice. And traders are like that as well, always bull, and some people are always bear. Whatever. My idea is, if I am bull here, let's say, but I would get neutral here. This is what I mean. Means I'm changing my stand, not emotionally driven by key level. See the difference. And if it enters into red zone, I becomes bear. So It's not about my personality or my choice. My stand is driven by key levels and the price level. So my key levels with respect to the price, or I would say price with respect to the key level, is telling me whether I should bull, neutral, or bear. See the difference? Yeah. So that's clarification from my end. This is what I mean that so because what happens, so this is like, you don't tie up, you are neutral as a person, but as a trader, you are bull because it's green, and then you would become a neutral when it is orange, and then I would become, let's say, bear. So as a, not as a person, as a trader. So you see there, but people mix up the role. They, the personality and a trading role need not have to be mixed up. These are two different characters. You as a person, you as a trader. These are two different roles. Like in our social environment, you as a brother, you as a father, you as a son, you act differently. You act differently with respect to different relationship. You as a friend, right? What you do as a friend is different than what you do as son, and so on. So in social environment also, we have different roles we play, and we kind of switch. Similarly, when you are a trader, your, so your personality in or individuality should not be driving the trading role. I hope I'm able to articulate properly. This is very important, but people kind of superimpose their personality, means emotion, on that, the trading guy inside you. And that trading guy inside you should be isolated from you, from your emotions. This is very important, right? If you are able to do that, then that trader will thrive. Okay. And that trader inside you is not you. Remember, that trader inside you is either following my TA or following your own TA. I mean, that trader's TA. I'm not saying my TA is everything. Okay. You would have that trader inside you would have some skill. So you use that skill plus my TA, and then as a package, you try to basically do your job as a trader. But remember, you and trader inside you are two different entities. Never mix up two entities. Okay. Like, you don't mix up your role, social role. You don't act like, I mean, if you're a father, you don't act like um, a brother to someone or friend to someone, like that, right? There are clear roles that you play in social environment. Similarly, trader's role is totally different. Like, what we do in office is totally different than what we do at home, because my role as a person doing a job in some office is totally different, right? So you got it. Similarly, trading is a role. Remember, it's a profession. Even if you're doing part-time, it's a role that you have to separate out. So if you are IT professional, if you are a lab technician, or you are an artist, whatever you are, you're playing different roles, but you keep those roles separate. If so, even if you're doing trading this for part-time or occasionally, you have different roles, and that role must be isolated. I hope that makes sense. Okay, so yeah, I think that this is so important. Okay, so with that note, BTC analysis is complete. Okay, there's nothing more to add from mine unless there's question. And I think as I see, the coins are making progress compared to when we started call. I see progress, so looking good, right? Um, and I think nothing is wrong, as I said, to summarize on BTC. Absolutely nothing wrong. This Bitcoin is totally fine as far as its price action is concerned. Okay, so now I think I'll stop this session because I do two recording, Bitcoin and altcoin, right? Separate recording. So I'll stop here.